Hey everyone, welcome back to Corporate Decoder, the place where we unpack those dense corporate filings to find the real story and maybe get a good chuckle out of it, because this Tanaka Growth Fund report looks like it's about to spill some serious tea on how they're growing our money or not. So this is a semi-annual report from Tanaka Funds Inc. for their Growth Fund TGFRX, covering the period ending May 31st, 2025. It's basically a look under the hood to see how the fund is performing, what it's invested in, and how it's managed. First up, the report highlights that this is the SEI annual Sharestelltail report for the Tanaka Growth Fund. It covers the period from December 1st, 2024 to May 31st, 2024 to May 31st, 2025. It's good for us to know exactly what period we're looking at, right? Now let's dive into the performance. The report states that the Tanaka Growth Fund was up 2.8% in its fiscal second quarter, ending May 31st. That sounds pretty good, but how does that stack up against the benchmarks? It compares this to a gain of 0.7% for the Wilshire 2500 Growth Index and a decline of 0 to 500 Growth Index, and a decline of 0.4% for the S&P 500 Growth Index, and a decline of 0.4% for the S&P 500. So Tanaka Growth Fund actually beat both of its comparisons in this quarter. That's a win. The folks running the fund believe this success is thanks to a diverse mix of their stock picks. They're spreading their bets across different company sizes, from small to very large, and different investment styles. From growth to more defensive value, they explicitly mention this diversification as a key factor in navigating a shaky economic landscape. They even give us a peek at who's been raking in the profits. Their top performers include a specialty pharma company, the company making those hot AI chips we all hear about, a gold miner, uranium companies, a warehouse automation business, and even a stable consumer staples company. It's a pretty eclectic mix, to say the least. Looking ahead, they're a bit cautious. They think that big market gains might be tougher to find in the second half of the year because stock prices are already high and there are worries about economic growth and inflation. But they're still optimistic about finding good investments in stocks, especially by picking companies that have their own unique growth plans. Now, let's get into where the money is actually put. This chart, the one that gives a breakdown of the fund's portfolio of investments as of May 31st, 2025, tells us a lot. And here's the list of the top 10 holdings. This is where a significant chunk of the fund's money is concentrated. At the top, we have Corcept Therapeutics, Inc., making up a huge 18.91% of the fund. That's a really big bet on one company. Then comes Nvidia Corp at 10.22%. Given how much everyone talks about Nvidia, it's no surprise to see them here, and it's a substantial holding. Close behind is Apple Inc. at 10.21%. So Nvidia and Apple together are about 20% of the fund, which shows a strong conviction in these tech giants. Next is Catalyst Pharmaceuticals Inc. at 9.45%. Then Next Gen Energy Limited at 5.48%. Following that is Stifel Financial Corp at 4.73%. The Carlyle Group Inc. is next with 4.35%. Symbotic Inc. Class A holds 4.21% of the fund. Aflac Inc. is at 4.01%. And rounding out the top 10 is Philip Morris International Inc. at 20.92%. All these top 10 holdings combined make up a massive 74.49% of the fund's net assets. This really emphasizes the growth aspect and also hints at the concentrated risk if any of these big holdings stumble. This pie chart gives us a sector breakdown. Healthcare is the biggest slice at 30.20%, followed closely by info. Technology at 27.70%. That's almost 60% in just two sectors, reinforcing that aggressive growth focus. Financials also take up a decent chunk at 14.60%. Now, looking at the schedule of investments, we see the actual holdings. Common stocks represent the vast majority of the portfolio, valued at 2,700 andadi airing 19. There's also an exchange-traded fund worth 411,180, which is 1.92% of the fund. And some short-term investments totaling 264,678, making up 1.23%. It's interesting to see here that liabilities are slightly more than other assets, resulting in a small negative percentage of 0 and TAV percent, or 26,786. This brings the total net assets to 21,429,091. Let's check the statement of assets and liabilities. Investments are valued at 21,455,877 based on a cost of 8,072,138. That's a significant unrealized gain just in the listed investments. Total assets are reported at $21,482,093. Total liabilities are a much smaller $53,002. And the net assets come in at $21,429,000 to what we saw earlier. The net asset value per share is 47.22. This is a key metric to track value per share of the fund. Moving on to the statement of operations for the 6 months ended May 31st, 2025. The fund earned $86,650 in total investment income, primarily from dividends and interest. However, total expenses were $216,629. This means the fund spent more on expenses than it earned from its investments. This resulted in a net investment loss of $129,979 for the period. But the story doesn't end there. The fund had a strong net realized gain on investments and foreign currency transactions of $1,095,255. On the flip side, there's a net change in unrealized depreciation on investments and foreign currency transactions of a negative $2,081,465. This means the value of some holdings decreased on paper. Putting it all together, the net decrease in net assets resulting from operations for this 6-month period was $916,239. So despite the realized gains, an investment loss and unrealized depreciation led to an overall decrease in the fund's value from its operations. Let's look at the financial highlights, which provide per share data for a better comparison over time. The net asset value at the beginning of the period was $52.37, and it ended the period at $47.22. This shows a decrease in the net asset value per share over the 6 months. The total return for this 6-month period is reported as a negative 3.76%. Remember, this is after accounting for reinvested dividends. The ratio of expenses to average net assets is 2.04%. This is the cost of managing the fund expressed as a percentage of its assets. And the ratio of net investment loss to average net assets is a negative 1.22%. This highlights that the fund's operating expenses are higher than the income it generates from its investments. The portfolio turnover rate is 8.115%. This is actually quite low, suggesting the fund managers aren't actively buying and selling a lot of stocks, which can be good for reducing trading costs, but might mean they're holding onto positions for a longer time. Digging into the notes under Note 1 Organization, we learned the fund is a non-diversified open-end management investment company. This means it can invest a larger portion of its assets in a smaller number of companies, and that comes with non-diversification risk. They warned that the fund's performance might be more sensitive to any single economic event more than a diversified fund, and its performance could be disproportionately affected by just a few stocks. This explains why they have such large holdings in a few companies we saw earlier. Under Note 2, Significant Accounting Policies, they mentioned that investments are recorded at estimated fair value. They record security transactions on the trade date. Note 3 covers SE securities values. They use market quotes for actively traded securities which fall into level 1 in the fair value hierarchy. For less liquid or foreign securities, they might use other observable inputs or even their own assumptions if observable inputs are available, which would classify them as level 2 or level 3. This table here summarizes those inputs. It shows that all their common stocks and exchange traded funds are valued as level 1, meaning they have readily available unadjusted quoted prices in active markets. This is good for transparency as it means the valuations are based on market prices. Now let's talk about fees under Note 4 fees and other transactions. With affiliates, the advisor Tanaka Capital Management Inc. manages the fund and acts as administrator. The advisor gets paid 1.0% of the fund's average daily net assets for managing it. For the 6 months ended May 31st, 2025, this amounted to $106,270. They also have an expense limitation agreement. The advisor has agreed to limit the fund's total annual operating expenses to 245% for Class R shares by waiving fees or covering expenses if needed. This is a common practice to keep costs down for investors. On top of that, the advisor provides administrative services for an annual fee of 0.10% on the first $50 million in net assets. That cost the fund $10,627 for these 6 months. There's also a distribution plan with a fee of up to 0.25% of net assets, which goes towards distribution and sales efforts. This cost the fund $26,506,506,506,506. In Note 6, Capital Shares, the report details the movement of the fund shares. For the 6 months ended May 31st, 2025, they sold 11,450 shares, valued at over $500,000. For the full previous year ending November 30th, 2024, they sold around 38,000 shares worth over $1.6 million. However, the fund also saw share redemptions. They redeemed about 35 shares in this period, worth nearly 1.4 million. The previous year saw even more redemptions, over 121,000 shares, totaling more than 5 million. This indicates investors pulled more money out of the fund than they put in during that prior year, and a significant amount during this current period too. Under Note 7, Tax Matters, they provide tax basis information as of November 30th, 2024. They had a net unrealized appreciation on investment securities of over $15 million. This is contrasted with a tax cost of investment securities of about $7.9 million. This means the current market value of their holdings is significantly higher than their cost basis, which is excellent for tax purposes if those gains are realized. They also mentioned deferring certain losses for tax purposes, a common strategy. Notably, for the 6 months ending May 31st, 2025, there was a long-term capital gain distribution of almost $1.4 million paid out to shareholders. This means they've realized profits on some of their long-term investments and are passing those gains on. Now, taking a step back and looking at this Tanaka Growth Fund report. On one hand, the fund outperformed its benchmarks for the quarter and has very strong unrealized gains on its holdings, meaning they bought many of these assets at a much lower price. The top holdings, especially tech giants like Nvidia and Apple, are usually good indicators of growth, and the fund's concentrated nature means when these do well, the fund does well. However, the fund experienced a net investment loss, meaning expenses outpaced income from investments. More critically, the total return for the 6-month period was negative 2.45%, and they saw a significant number of share redemptions, especially in the prior year. This suggests investors might be pulling money out, perhaps as the fund's performance lagged over the longer term. Despite the recent quarterly outperformance, the high concentration in a few stocks is a double-edged sword. It amplifies gains, but also amplifies losses. And the negative total return and redemptions hint that investors may be wary of this concentration or the fund's overall strategy for sustained growth. They're essentially betting very heavily on a few companies to drive future returns. So, while the fund has some strong growth potential on paper with its top picks and unrealized gains, the current period's negative return and investor redemptions certainly raise questions about its consistency and whether its highly concentrated approach is truly working for investors in the long run. Alright, that's our breakdown of the Tanaka Growth Fund's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord link in the description below for more community insights. Thanks for watching. See you next time.